Good morning. It is almost 10 UTC here on Friday, the 4th of October. Just going through everything as it's coming in. So, looking first from yesterday to today, a bit of a mixed bag. Higher than expected initial jobless claims, slightly lower than expected PMIs, nothing too crazy. The big stuff really happens today, in my opinion. We've got quite a bit of big data coming in 1 hour before the New York Open, so expect some pre-market and open volatility. That's at least my expectation. Non-farm payrolls and unemployment being the biggest ones there. Just to look at next week, just to see what's going on. FOMC meetings coming in late in the evening Wednesday. Nothing of importance Monday, Tuesday by any regards. And then obviously Thursday, massive CPI data dump, initial jobless again. So watch that later in the week. Expected some increase in volatility with those numbers coming out. Looking into Bitcoin a bit more specifically, long short ratio, it's coming back in, but it's pretty stable right now at about 61-62%, has been in for a while. So overall, long still coming into the market. It's not overly bullish, overly bearish conditions. Is pretty neutral. This is generally because the long short ratio should be about 60-40, just because the average or the majority of people are longing statistically over time than they are shorting. So just keep that in mind. For right now, it looks fine. It's pretty stabilized at these points. If we look a little bit lower time frame, we're seeing a little bit of a dip, some shorts coming back in just because we're seeing a little bit of an upside drive. But overall, it's running a bit neutral, potentially even uppish. Looking over at funding rates. So funding rates, again, you're looking at positive or negative. They're only slightly positive. Bitmex and Binance on the USD pairs, Bybit on the USD pairs. On USDT, Binance actually showing a negative. OKX, Bybit, slightly more so, but in general, that's not bad in my opinion. Like that's okay. We could have a little bit of a pop. We had quite a bit of positive funding rates, so there have been some build-ins at the current lows. So this again, kind of neutral. I wouldn't say bullish, but definitely more neutral than bearish as it looked earlier in the week. Looking over at some liquidity as well. So given what we've done and what we're looking at now, this little down move, this accumulation period since the first, since we had that major flush out on the first, this has allowed two things to happen. One, the linking of the older liquidity that was below 59K has now been linked to the local liquidity. And this means that if we do start having a bigger leg down, we want to see significant losses at 60.1 and 60K, which would open up all of this long liquidity down to 58K. So that's almost one continuous little loop that we're looking at there for that going back lower. That being said, the current price action on the lower time frames is actually quite bullish. We've come up to some local highs. We're seeing some local failures here at 61, call it 61,450. We're seeing some sell-offs. Again, you want to wait for even lower time frame failures. Breaking below 60.5 even could either force a retest of the lows or a move back lower. Realistically, to keep this as simple as possible, like that's your high range, that's your low range of this current structure. You should still be net short, as we were talking about from the breakdowns over the weekend going into Monday. But if you are looking for a new position, wait for something to gain above or lose this level. Don't try to play anything other than short the high of the range, long the bottom of the range, proven otherwise. I think we're pretty close to proven otherwise today. I think we're going to get a potential breakout of this structure. So with that being said, we will look over at trading light to get some data. So first off, looking at the heat map, do we have any major orders coming in? We saw some long stepping in just sub 60K. I would expect that if we do start breaking back down to these lows, we'll get some more fuel to push us lower, potentially even towards that 58K zone. I think that's pretty realistic off the local stuff. Open interest has also been climbing pretty steadily, so we know people are longing in this area, as well as the fact that we saw in liquidity that the local liquidation stuff has stepped in to link the local lows to a 58K if we get another forced move back to the downside. To the upside, not a lot of people stepping in trying to short this structure, even less so now. So even on the current candle, it's just basically a dead zone above us. And then looking over at the footprint, we'll look here on some structure. Yes, we've had some nice step-offs moves. These guys haven't really been punished. We've had a pretty strong aggressive move up. We're seeing a potential reversal here on the 4-hour just based off of market orders. And that's what the order flow is. It's just showing you the aggression. Current morning aggression is to the upside until we actually see failures. If we start losing like local block stuff, 60.5, 60.6, basically losing this stuff here, it could open us up to a continuation move down. For right now, it looks okay. We've popped that local high. We want to see a good close on this 4 hour. But again, I cannot reiterate it enough. You are still in the range from 61.8 to 60.1. Play it accordingly. Looking over to Trading View for the general plan. First off, I just kind of want to look at liquidations in this area. We did say that the local liquidity just got tagged to that really high leverage stuff from today and yesterday, 100x and 50x from today, and then 100x from yesterday, just got tagged in this upside move. The liquidity dead zone that we had below us at 60K, we're starting to see that being replaced with some more local high leverage liquidity, which could easily force us back down towards 58K. We have nice big blocks of 10x and 20x leverage positions below us. To really gain above, like I said, you want to see gains that start targeting that high leverage stuff above us, which then end up retesting lower structure in case you get that gain to move up to retest stuff. There is short liquidity there. There's quite a bit building higher, like lower leverage stuff that built above the current highs. So that's good. We want to see that continue. But for right now, we're still downtrending until we regain some levels. Arguably, it looks better today than it has in the last couple of days. Nice big wicks to the downside, some bullish back tests of level on the very local and lower time frame levels. Again, nothing major regained as of yet. Looking over to the TA for the zone. Boom, boom, and let's go lower since 4 hours is a bit much for a lot of people. There we go. So this is the general kind of outlook in this area. We do have some significant levels above us. July Q3 has already been tested. That was the layup short, as we were breaking structure, as was the August level from previous in the week. To really gain above stuff, we want to see that squeeze higher into this zone. We talked about the move yesterday, this kind of step off to regain stuff. We're failing to regain. Wait until we get the regain if you're not already in a position. The low that must hold 60.1, or we're sweeping 60K, where we're likely to go back lower to September, and then we'll have to readjust going into the weekend. Again, it is the weekend structure. I'm not expecting a whole lot as far as CME gaps. We haven't had any major CME gaps in several weeks. So hopefully we trade a little bit flat going into the open on Monday. Going into the upside move, if we can see that regain of level, let's see if we can get some volatility. Like I said, in about 2.5 hours, we get that first big block of data releases coming in pre-New York Stock Exchange Open. If we see that test up to 63.3, that is the October Q4, you might be seeing an initial immediate reaction, immediate rejection. You could even see a bearish version of that, which is just testing July Q3. Because we've broken down, we're still looking at a potential short. That goes out the window if we start basically creating higher highs and higher lows. If we come up, reject, and then don't come back lower, we actually come back to say that all of a sudden this structure's opened up to where we can then be looking at, oh, this is the back test for a continuation move. So for right now, that's all I care about is the gain there. You're still at resistance, so you're looking at a potential short, higher risk back down to the range lows. And that's the way to play it. Play the range until proven otherwise. If you're not in a position, if you're in shorts, stay in them until proven otherwise. If you've got a local long, from the lows we have here, I would say this is a great profit target area. Regaining this is what breaks us out of the range. Losing 60K effectively is what loses the range low. So that's that. Take it easy, and I will catch everyone on Monday. Peace out.